Welcome back to this episode of I Date Money, Money Talks. I'm your hostess, Lisa Drennon, your profit strategist and wealth activator. Today we are talking about a story. It's story time, people. So grab something to drink and come join me, hang out with me for a few minutes. I want to tell you about the time I freaked out about taxes. Yeah, every year these things happen, right? And we think we're prepared, but then we're not. And we're like panicking. And, towards the end of the year, when we're thinking about our write offs, I've heard a lot of people receive some bad advice. You need to spend X amount of dollars in order to save on taxes. And then they'll go out and buy something that they don't need or invest in a coaching program that they already have or probably already have somewhere in their arsenal. And they don't really need to do that. What would it look like if you prepared for this now, today, right? And even if we're getting close to tax season, you can still prepare. It's never too late. Always be prepared. That was a Boy Scout motto. I'm a Boy Scout, yeah. When we think about how do you freak out about these things? How do you stop freaking out about these things? These come up. In the Wealth Activation Roadmap, we have a future funds account. The future funds account is the sinking account. You may be familiar with that term. It's been around for centuries, right? Decades. And it's all about preparing for things that are unexpected. Something breaks, holidays come, birthdays come, we can expect to have these expenses. Why don't we set things aside for them? I had a coworker who used to buy his cars in cash. And every time he bought a new car, he'd have his pile of cash and go and purchase it. And then he would start that fund up again, that money bucket for that new car, so that in 3 years, 5 years, 10 years, however long it was going to take him, he would have that nest egg for the vehicle that he desired. Preparing. Plan to prepare. Because if you fail to plan, plan to fail. Simple as that. And a lot of times, we think about this. When I worked at the Social Security Administration, I worked with a lot of individuals looking at their tax returns, their income, their finances to see when is the best time to retire. Is it at 62 versus 65 versus full retirement age? And a lot of times they didn't pay Social Security tax that would fund their retirement account. They paid their federal tax and they assumed that it covered their Social Security FICA tax, but it didn't. So I know I have a lot of entrepreneurs in my audience. If you're not paying into the Social Security system through your self-employment, you are not contributing. You want to start thinking about if this is something that you want to do. And if you have no pension, come talk to me. I have a great solution. I have this income projection that tells you exactly how much you need per month in order to retire. So back to taxes. Everyone dreads that tax, right? No one likes to pay taxes. Every time I have a guest on my podcast, I Date Money, they tell me, I don't want to pay taxes. I'd rather avoid those. And I've had some guests who actually have strategies to legally avoid taxes. But what happens is, if you're earning, the rule of thumb, general rule of thumb is if your gross receipts are less than $250,000, you have an LLC, you are defaulting on your taxes to file as a self-employed individual. So this means, a lot of people think I'm going to open up an LLC, the LLC is going to absorb the taxes. No, you have to elect to file taxes under the S-Corp or the C-Corp. Now, C-Corp is usually when you have employees, you're doing in person, you have that brick and mortar most of the time. S-Corp is usually for online entrepreneurs. And, a lot of times, it might be beneficial for you when you hit that 150,000 to elect to file for that S-Corp so that the LLC can start paying the taxes. But remember, when you start paying taxes, you start drawing a check from your business, you become an employee, you're paying payroll taxes. Really important to go over those figures to see, is it going to give me the best profit for me to file this way? And again, I'm looking at that number of 250,000 gross receipts. If you have over 250,000, this isn't a conversation. You could probably just, go do something else. You don't even have to listen to this little video training. So Everyone gets anxious around tax season because when it rolls around, if you're working with an accountant or a bookkeeper and they tell you got to spend X amount of dollars to save on taxes, stop and think, okay? How is this going to benefit me overall? And what does it look like for you to have a tax bucket, a money bucket set aside for your taxes so you don't have to worry about it? I don't pay my taxes quarterly because I like to keep the money in a high yield interest savings account. I just pay it by April 15th. But bonus, I've gotten a refund because I've optimized the same exact strategy that I teach in the Cash Flow Glow-Up. In the Cash Flow Glow-Up, I'm going to be hosting a masterclass on May 14th at 1 p.m. Eastern Standard Time. I'm going to show you the exact strategy on how to save money on your taxes and make money so that you have this cushion. You have more profit in your pocket. And who doesn't want that? Oh, I like that. More profit in your pocket. I'm going to have to coin that, right? Unless it's already coined. Maybe it is. So you're not alone if you're panicking. So years ago, my client Anne was running a business, raising kids, juggling all the things, managing all the finances. And she had income coming in, but no real plan for it to go out. No money buckets. So when tax time hit, she got hit with a $50,000 IRS bill. She was like panicking, jaw dropped, heart racing, right? She's like, oh my goodness, how am I going to come up with 50 grand, by April 15th? She wasn't paying attention to her money. She was ghosting it. And because of that, she was scrambling to make more money, to bring in more income. She ended up creating more programs to bring in fast income, and she still couldn't pay it. So when we first started working together, she came to me with this debt and thought, you know what? I make so much money, and yet I don't have anything to show it for it. What kind of a system can I put into place? And she thought she had a pretty decent system, the old accounting method with the paper and pen, money went into her bank account. She knew what went out. But because she wasn't giving her money a job, every dollar has a job, she wasn't profiting off of her income. Everything was being spent. So the faster it was coming in, the faster it was going out. Excuse me. So let's break this through. Let's have a breakthrough with our money. This changes when we create the spending plan and you open up a dedicated account. I love online banking because you save money, you earn money. Online banking account with Novo. Check the link. It's a referral link. We both get $40 when you meet the criteria, and $40 is good, right? What can you do with $40? But this allows you to set up money buckets for your expenses, your taxes, your operating expenses, your profit, and your owner's compensation, your paycheck, okay? It has built-in money buckets. You don't have to do anything. The money goes in, it automatically gets allocated, and you sit down, you have your date with money, you transfer it over, and voila, you start to make money on your money. And that's exactly how it works. It's that simple. So when you set up your reserves, usually the general rule of thumb is you set aside between 15 to 30% for taxes. And then the other percentages are going to depend, on what your business does, what your expenses look like, and I can help you with that. If you'd like, just book a call and we'll go over that. I have a profit audit where I look at your overall business and tell you exactly what you need to do to increase your profit. Most people who get the profit audit end up increasing their profit by 30%. I am a profit strategist, so I love looking at people's money and finding ways that they can increase more of their money, keep more money in their pocket. So when you implement this system, taxes stop becoming scary. They're no longer scary. You're like, oh, no big deal, because you have that money growing. So when Anne implemented this system, not only was she able to pay back that $50,000 within a year's time, she had the money set aside, growing in an interest-bearing savings account online that allowed her to earn money on her money. And then when she got ready to pay Uncle Sam, she had a surplus. And bonus, because she had a surplus, she got a little refund from herself with interest. Now, you can't beat that. It's so important to have this system in place. So click on the link in the show notes to come dive into this deeper, get the walkthrough of exactly what you need to do to set up this strategy. The Cash Flow Glow Up. is worth your investment. It's only $7 and an hour of your time, and you'll get the exact strategy that helped Anne pay off that $50,000 and increase her profit by 30%. Because remember, it doesn't matter how much money you have, it's what you do with it.